Hello, everybody, and welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, just by looking at this graph, you can see it's been a pretty wild ride. This is where we always start. This is SPY, the ETF of the S&P 500, which is essentially the market as a whole. And you can see this has been on a pretty wild ride for the last, I don't know, month or so, pretty much going straight up even though volatility is still staying pretty high considering. Because usually what happens when the market goes up, that means people aren't scared and volatility tends to kind of trickle down. But in this case, for whatever reason, the market is still a little unsettled. And the reason I say that is because of this, because volatility is so high. You can see it's about as high as it's been, except for like a gap here and here in the last 6 months. So markets at all-time highs, volatility still pretty high as well, so people are still a little uncomfortable. Doesn't mean it's not going to keep going up, but that's just kind of the overall sentiment and what it means. If I look at the NASDAQ, which is the QQQ, pretty similar story as you can see. Also straight up for a month, volatility still pretty high considering. And if I go finally to the IWM, which is the small cap stocks, pretty similar story. Obviously a bit of a whoop-de-doo here, but also been going pretty much straight up for a month. Also volatility fairly high. So what are we going to do this week? Well, we're going to do one more time just to learn the skill set. We're going to do an earnings trade, and we're going to do it in Shopify. And we start by looking here, and you can see it says earnings on 5/5 before market opens, which means we have to put on this trade on 5/4 before the market closes. Now remember, when we do earnings trades, what we do is we want to put them on in the last hour before the market closes, because that way we know where the price is and the volatility, and it's like the most accurate assumption at the time. And then we take them off in the first 15 to 30 minutes of the next day. So on 5/5, when the market opens and earnings have come out and the stock moves where it's going to move, we're going to take off that trade, winner or loser, in the first 15 to 30 minutes. Unless it's a full loser, which it can't be because it's only on Tuesday morning and we still have the whole week left to go. So this one comes off for me in the first 15 to 30 minutes the market opens, no matter what. Winner or loser, it comes off. So how do we set this thing up? So we go to the trade page. Number one, where we start with the shortest expiration cycle possible. So this is 5 days, which means tomorrow there'll be 4. And when we take it off, there'll be 3. But we're going to put this on tomorrow, Monday afternoon, before the market closes in the last hour. And right here, you can see it says MMM. And what that means is market maker move. And what that plus minus $13, 12.79 is telling me is that the market is expecting the stock to be up or down $12.79 tomorrow. In the marketplace, it's looking to basically move up or down $13 is what the market expects to happen. Doesn't mean it will. It could move outside that range. It could stay well within that range, but the market is assuming there's a $13 up and down range. So if we want to put this trade on, obviously we're not going to know when it comes time tomorrow if this number has changed at all. So a shortcut way to do this, and I'll show this to you now, is we do something called sell the straddle. And what that means is we're going to sell a put and a call right near the stock price, which in this case it's closest to 128. And I'm just going to go here with the mark, just do an easy assumption. And you see it says 765, and on this side the mark is 737. Pretty much $15 if you add them together. And a quick and easy method to work out the expected move, and you'll do this on tomorrow afternoon before the market closes if you don't have this market maker move built into your platform, is we take the $15 expected move and we multiply it by, I don't need that, we multiply it by 0.85, and you'll see this ends up being around $13. And you can see that's also, where's my cursor go? Can't find it anywhere. Oh, there it is. $13. It's actually about 12.80, and you can see it's about what it is here. So pretty accurate, kind of back of the envelope kind of way to do it, but you can do this on your own when the time comes. Sell the straddle, take about 85% of it, and that'll give you a rough idea of the expected move. So what this means is this is about 128. That means we want to be $13 up and down away from the price, because that's the cushion the market is expecting. So I've set this up already, And you can see if we just make this 128 and I go $13 up, that means I'm selling the 141. If I use 127 and I go $13 down, you can see that gets me to 114. And then I'm going to buy and sell the call and the put $2 away. And in this case, the credit is really up to you. Because this is a one-day trade, we don't follow our normal 33 to 50 cents per dollar wide, because it's only a one-day trade. You might be happy selling this for 50 cents. You can expect if everything goes our way, we might take about half out of this thing. So if I sell it for 50 cents, I'm probably looking to do no better than make 25 cents, $25 on the trade. So if you use that as your kind of barometer, then we know like we don't want to sell it for 20 cents because 10 cents is not even going to cover commission costs. Me personally, I'm probably looking to sell this thing for like 60 cents at the minimum, because that way I can make at least 30 bucks on the trade if all goes my way. But we can obviously take more. You can take less if you want to. 60 cents on $2 wide is about where I want to be at the very minimum. So that would be our earnings trade for tomorrow. 1 hour before close, we'll put this on. We'll figure out the market maker move. We'll put our call and put that move away. Oops. And then we'll create that $2 wide iron condor by selling the put and call $2 away. And I'm looking to collect at least 60 cents or more on this trade to make it a valid earnings trade for myself. And then again, we're going to take it off in the first 15 to 30 minutes on Tuesday morning when the market opens. Hope that all makes sense. You'll have to watch this a couple of times for it to sink in, but that is how we make earnings trades. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.